Hello everyone, and welcome back to Explain the Charts. Today is March 31st, 2025, and we are going to take a look at Google stock. We're going to analyze both the recent news and the candlestick chart data to give you the best overview and help you better understand the market, potential trading opportunities, and what to look for. First, let's start with the current events. Recent Google searches indicate mixed sentiment. There are articles about analysts lowering price targets, such as Jefferies lowering their target to $200 and others lowering to $167, while Forbes is questioning whether Google is currently undervalued. We also see news about Alphabet settling an ad pricing lawsuit. These events may influence short-term volatility, so let's move over to the charts and see how these events may have affected the stock price. Looking at the one-day chart, we can see the overall trend. There was a significant drop in late March 2025, likely corresponding to the news of potential tariffs affecting digital ad giants like Alphabet, as well as the settlement of the lawsuit. Notice the large red candle near the end of March indicating a strong bearish move at the time. We're currently seeing some consolidation, but let's zoom into the one-hour chart to get a clearer picture. Switching to the one-hour chart, we can examine the recent price action in more detail. There appears to be support around the $160 level, where the price has bounced a few times. However, the overall trend seems bearish in the short term, with lower highs forming, indicating potential downward pressure. Let's narrow the chart to the range of candles starting from March 26, 2025 to March 28, 2025 to get a closer view. Zooming in on the recent price action with the 15-minute chart, we can see a choppy sideways trend during this time frame. The range is pretty tight here, suggesting indecision in the market. We can see the price hovering around $162 to $164, with multiple attempts to break above and below this range, which ultimately failed so far. Now, let's discuss some potential scenarios. In the short term, if Google breaks below $160, we could see further downside towards $155 or even lower. Conversely, if it manages to break and hold above the $165 level, it could signal a potential reversal and a move towards $170. If Trump's tariff policies negatively affect the market, then we will be more likely to see it drop below $160. Long term, Google still has a strong position in the market. If Google can show that it is handling the rise of ChatGPT and consumer sentiment turns positive, we may see it make a run for $170. A significant factor is whether Google can demonstrate successful growth in its cloud computing unit, which could offset the challenges in the search sector, making the $170 target more likely. Keep an eye on news and analyst reports regarding Google's AI initiatives and advertising revenue, as these will greatly impact the stock. It is unlikely for Google to reach a price of $5,000 per share by the end of the year. To recap, key price levels to watch are $160 as a support and $165 as a potential resistance. A break above $165 could signal a short-term bullish move, whereas a break below $160 could lead to further downside. In summary, we're watching for a break above or below those ranges to decide a position. I would give a 60% chance of hitting $170 in the next 6 months if cloud continues to grow strongly. I would give a 70% chance of dropping below $160 if tariffs affect Alphabet's ad revenue. Thanks for watching Explain the Charts, and as always, good luck with your trades.